Let's go. This is the second part of a 4-part series. In part 1, we talked about some generalities of lithium investing, strategies on how to build a lithium portfolio, and a bit about the Australian market. Now, in part 2, we'll talk about some of the ASX-listed players and expand our view into battery metals more generally, still staying down under. Stay tuned for parts 3 and 4, where we'll cover the TSX-V and other exchanges. Let's look into this. So, where do we start? Given that Australia has abundance of hard rock deposits, you would think that is all you can get. That's all the exposure that you can get, right? Wrong. Luckily, Australians are intrepid explorers and are not strangers to venturing far from home, sometimes very far, to discover value. Hence, you can tap into the ASX to find multiple sources of lithium, as well as related tech and other metals widely used in batteries, namely cobalt, nickel, manganese, vanadium, and even rare earth elements. So all in all, we're tracking close to 80 companies within the battery metal space. That includes all those metals, and we are adding new ones as they join the fray. These companies today represent over 37 billion in market value and over 4 billion in annual revenue. Most of the massive store of wealth is connected to lithium, as you can see in the chart here. This is hardly surprising, knowing that Australia is the largest producer globally. Moving on, you can see that nickel comes at number 2, and the rest are all combined in spot 3. Let's get rid of that. Okay. In lithium, there are a few locally listed plays to pay attention to, ranging from producers such as Pilbara Minerals, PLS, here, oops, that's too big, PLS, Orocobre, ORE, and Galaxy, GXY. Currently, these two companies are currently merging to create the 5th largest lithium company in Australia. We talked about this deal in one of our previous editions. To developers such as Liontown Resources, LTN, Lithium Power International, LPI, and finally, a strong group of explorers such as Lake Resources, LKE, Sayona Mining, SYA, which also partnered with Piedmont Lithium, PLL, as well as Infinity Lithium, INF, Galan Lithium, GLN, and Jada, GDR. Within the tech hopefuls, always related to this space, we have a couple of companies that stand out, and those are Lithium Australia, LIT, and Neon Metals, NMT. This are mixing stages, sources of lithium and minerals, processes and jurisdictions, plus tech, as discussed in part 1. Technology is advancing rapidly, as you all know. The composition of batteries will undoubtedly change and evolve. Lithium is unstable when in contact with oxygen, so for years the preferred solution has been a lithium-ion cathode, where the white metal is combined with nickel, manganese, cobalt, and or aluminum. Thus, it is worth briefly discussing some of these metals as well. Nickel and cobalt felt a downward pressure in pricing for a long time, but this has seen improved substantially, especially since the end of 2020, causing a new rush. Cobalt has another issue though, huge reputational issues, mostly tied to the DRC, which produces over 60% of the global production of cobalt. Providing supplementary, ethically sourced cobalt is crucial. Source tracing tech is likely to become relevant to tackle questionable supply moving forward. We also need to point out that today, no viable technology that can be mainstream in the short term is able to create these batteries without cobalt. Replacement will likely happen, but in the medium to long term. Aeon Metals, AML, and Cobalt Blue, COB, are part of the handful of local players to watch in cobalt, and Mincor, MCR in nickel. So many great options. What will you choose? Know that we will be building on this topic, so we'll keep talking about this and sharing results from our research. Consider that in this analysis, we have expressly excluded miners focused mainly on copper while targeting generic end consumers not battery related, since the size of that sector would skew the data and prevent identifying significant and relevant trends. And also South 32 S32, which is a diversified miner that happens to also be the first producer of manganese, because its 14 billion market cap would also be an outlier and mess up with the data. All right, that is it for today. We'd love to hear your thoughts. Reach out on our social media channels to chat, and also find additional resources in our website for additional research. And we'll see you next week.